Hello and welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Wednesday the 6th of May. Well, we've got sort of a mixed outlook really that has taken hold into the European session. Nothing too decisive in terms of direction. A little bit of dollar strength coming back in as we've sort of developed through this European session. But you've got equity markets that are trading higher. So we've got some mixed signals. You've got oil price, which is higher. You've got equities, which are higher. You've also got the treasury yields, which have also ticked higher. So that's broadly speaking risk positive. But if you actually look at the fact that the dollar is now broadly stronger actually against all of the majors apart from the yen, that would suggest Forex is fairly risk negative today. You've seen that dollar picking up, the euro coming under pressure, also sterling back under pressure a little bit today, back under 24 figure. That's a bit of a downside break we could be seeing there on cable. So I'll talk about technical implications of that. Gold still holding ground, interestingly enough, despite markets sort of chopping around a little bit today. Gold is still holding up fairly well, but these equity markets just uncertain really in terms of direction. S&P 500 future, well, S&P 500 first of all, ooh, that was a bit of a worrying move. That filling the gap and closing lower again, that's a concern that we saw from the downside gap from Friday into Monday. But you do see futures trading higher today on the in Wall Street. These are the S&P futures of the E-minis contract, and they are trading higher. So we're sort of mixed outlook really today. What we have seen is that we're still getting out some pretty dour data. You've had some German industrial orders, new orders, there, the component there falling really sharply, around sort of 16% negative in that new order data there for the German industrial orders, not positive at all. That, but also we've seen this morning the services PMI, the final data, coming basically in line with expectations, aren't they? Composite PMI 13.6 for the Eurozone. Look at that construction sector data for the UK, 8.2 on the PMI there. So, oh, goodness me, that is terrible. Anyway, so focusing on jobs in the States in the afternoon, we've got the ADP employment change. This is going to be a pretty big harbinger, I think, for obviously payrolls on Friday. 20 million negative. So an incredible decline in jobs in the States for April. Could well be the market's basically expecting that number again to be replicated on Friday in the payrolls report. So that's there. And then at 3:30 we've got the weekly crude stocks, 7.6 million barrels. Now that would be a 15th week in a row of oil inventory build. Now I haven't looked all that far back, but I can't imagine that we've seen that before. So oil inventories building 15 weeks in a row, and another big number, 7.9, I think it's 7.8 million barrels there, so another big one. But you could argue they are starting to fall away potentially. So into my chart of the day now. I talk about risk appetite quite a lot, and I like the risk indicators for that. So the Australian dollar is always up there in my list of watch markets. And what we see is this Australian dollar, which is now sort of pulled back to what is essentially at the bottom of an uptrend channel. 63.70 was that low that we saw on Monday. That rebounded. A little bit of a positive candle, you could argue, on Monday, but that was negated pretty much yesterday and again consolidating today. But the concern I've got are these, at the moment, these momentum indicators are still positive. RSI is still hanging above 50 mark. That is still fairly positive. But MACD lines coming together, are they about to bear cross lower is the question. So the importance of holding this support, and increasingly also this 21-day moving average, which had been the basis of resistance throughout January, February, March, into April, turning up becomes supportive. And it is supportive, flanking the bottom of that trend channel. So that is the sort of couple important indicators there. Obviously, this support at 63.70 is key now. You need to hold on to that, otherwise you start to form this new lower high, lower low downtrend formation, which would obviously breach that uptrend channel as well. So this is the concern that you have at the moment, with the fact that the market is just stalled in the last couple of sessions, which is a little bit of a worry. But a downside break of 63.70 would put the pressure on back towards 50% fib, 62.70. Again, 62.50 is that reaction low that we saw late April. So all key levels, but I'm just a little bit concerned about how this Aussie is going at the moment. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and you can go to our website where you can sign up for our webinars.